the biggest talking point this morning, and has to be the comments coming in from Federal Reserve Chairman Jerome Powell. The central bank leader expressed concerns over how higher for longer rates could actually dent economic growth. Even as he flagged concerns over the lofty rates, he lauded the US economy and the labor market for the continued strength despite the recent cool-off. Powell cited some easing in inflation, which he said policymakers stay resolute in bringing down it to their goal of about 2% or so. Remember that the commentary coincides with the approaching one-year anniversary of the last time the FOMC raised the benchmark interest rates.
In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Doesn't seem likely that the next policy move would be a rate increase. We don't take things like that off the table, but that does not seem the likely direction. The likely direction does seem to be as we make more progress in inflation and as the labor market remains strong, we begin to loosen policy at the right moment.
And meanwhile, the U.S. Treasury Secretary Janet Yellen comments on inflation will be important and in focus today. Now, Yellen expects inflation to ease over time, even as rent and house costs keep inflation in the United States on the higher than preferred mark that they have. Additionally, she said that the inflationary factors, including supply issue and labor market tightness, have eased, which would help continue drive down the consumer price pressure.
If you like this video, then like, share and subscribe to ET Now.